Back to you in studio.
All right, thank you very much, Noah Kipkemboi there, and it's quite an unfortunate situation. Of course, we understand that there are all these global factors that need to be considered, but again, the question that begs is, why didn't it come down when the crude prices were down? And of course, that's something we'll be following to see what happens and how the government reacts in the future. But for now, we want to switch gears and talk about asset management. And of course, we have the best analyst in studio, Mr. Barak Obatwa, who is the Britam Asset Management CEO. Barak, karibu sana to the program.
Thank you.
All right, so let's get this conversation on the road. And the first thing that we want you to help us understand is, in terms of the asset under your management, what is the cumulative value?
Our asset under management now of just over 200 billion Kenyan shillings.
All right, so the question that I'm sure a lot of people and a lot of our viewers would want to understand then is, you have assets worth over 200 billion shillings. How does it make business sense for you as an asset manager?
Well, it makes business sense because, number one, of course, our job is to create value for our investors. So that's what we focus on first, to make our clients happy. And, of course, as an asset manager, we charge a very nominal fee. And we ensure that as experts, as investment experts in this area, that we manage your assets very, very prudently. To ensure that, number one, we're able to secure your investments against capital losses, and also we're able to return, to give you a reasonable return at the end of your investment period.
All right, so the market is changing, and at the same time, we have been having this headache, which is high interest rates. So from where you sit in terms of investment decisions, how then has that affected the decisions that you're making and in the sectors that you're investing some of these assets?
So yeah, interest rates are a key factor. Of course, interest rates are just basically the price of money. And what has happened because of the global events and obviously the local events, we've had to readjust the way we are making decisions. Number one, we've noticed that, of course, the government has been issuing through central bank bonds and treasury bills at much higher yields. And our job as investment managers is basically to try and take advantage on behalf of our clients, so that we invest at those higher rates and be able to capture those returns, because as we say, this is basically seasonal. The moment probably the government requirements is, then interest rates will start coming off.
Yeah, so Barak, the yields from government paper particularly has been, I think, the highest we've seen recently. We're talking about 18%. So in terms of investment, is it the right time to invest in government securities?
Yeah, I mean, if you ask me, I think it is the right time. We may not have completely peaked in terms of the rates that we are seeing.
Yeah.
But if you look at a rate of 18% and you look at other types of assets, because you compare that with other types of assets, be it properties, be it equities and other type of investments, it's long since we saw a rate of 18%. Normally, the rate of 18% now will normally be printing at around 9%. In some cases, given the type of bond issues that have been issued of between 2 and 5 years. So if you compare that with those historical rates, you notice that this is probably a very good opportunity for investors to invest either through certain type of assets like bond funds, money markets, or maybe just directly depending on the requirements of that particular client.
All right, but again, Barak, when you have government offering such attractive rates, the question then that, of course, is the concern for everyone is what is the net effect of that to the economy, to the private sector? Because largely, even banks which would have easily lent to the private sector now turn to government bond.
Yeah, it is true. High interest rates by and themselves are not a very good thing. Simply because they'll reduce the productivity in the economy, they will likely slow down economic growth because many companies, many individuals cannot afford rates as high as that and be able to produce a decent return for their businesses. So this is not a very good development, and that's why I said it just needs to be a very temporary development. Either to sort out some of the exchange rate pressures we're having, or basically to ramp up temporary government spending before that eases down. You also notice that at 18%, it is possible that defaults will likely rise, and obviously that is not a good thing for individuals and businesses alike.
All right, so Barack, apart from just government paper and of course that being one of the most attractive sectors, so in your assessment, where would you say this is the areas with greatest opportunity, and particularly during this high interest rates environment?
So, I mean, we are looking at a number of opportunities. Obviously, government instruments are quite good. But also for individuals who may not necessarily be able to raise the minimum amounts that the government wants, or who have liquidity requirements. One of the things that we advise them is basically look for a unit trust fund, look for a mutual fund. There are many providers. We do also, as Britam, offer very good instruments of that. The other providers as well. So that those kind of instruments allow you to provide liquidity, probably much better sometimes than government instruments, which may require you to probably go and sell at prices that might not be very advantageous to you as an investor.
All right, and I'm sure this is something that probably you have experienced, the fact that Kenyans are quite risk-averse investors. So the question that then comes to mind is, how easy or how hard is it for them to access their capital?
Well, given the risk-averseness, again, that then brings me back, and I always say, like, if you go to a properly well-managed unit trust fund, access to your liquidity is almost, I wouldn't say guaranteed, but it is almost assured by law and regulation, but also by the way those investments are structured. So you can get your funds almost immediately, like you do in a bank account. So very flexible, very liquid, and you still enjoy very, very, very high, decent returns on those investments.
Are there any lock-in periods for the money that has been invested already?
Ordinarily, no. If I talk about ourselves, Britam, unless we pre-agree with a client, most of our funds have no lock-in periods. So you bring your money, we invest for you, and when you need your money, according to your liquidity needs and requirements, we give you back your money.
All right. Not so long ago, Barack, we were seeing a lot of investments going in the real estate sector. Why do we see the slowdown that we're currently seeing at the moment? Why are investors shying away from the real estate sector?
Yeah, the real estate sector, there has been quite a bit of headwinds. Number one, just like any investment cycle, there has been, if you ask me, quite a number of investments. In the sense that people have invested in certain types of assets in certain locations. There has been so much capital going there, so that is bound to bring down the rates of returns. Again, economic fortunes, low credit, which basically upcycle some of these investments has also plummeted. Or basically gone down, and that has kind of affected the real estate sector, and also in some areas there is oversupply of properties, and in some areas you find that some economic segments that were being targeted for those kind of investments have in some way been saturated.
All right, so again, there's the question of how do you manage portfolio risk? Because again, the environment is quite volatile, and as you look at all the other factors, be it domestic, be it external factors, it has made the investment environment really volatile. So how do you manage portfolio risk?
Yeah, I mean, there are various ways that we manage portfolios. Number one is you have to try and manage the risk of your investments. Because the primary risk of an investment, as we define, is number one, the risk of loss. For us, we, as Britam, we like defining risk as the risk of capital loss. So one needs to forecast and think about your investments and say, what is going to affect my cash flow generation for these investments in the future? Yeah. And that's what we manage, be it change in interest rates, be it change in inflation, be it change in exchange rates. The other thing that we also like to look at for an investment that you make, you always want to ask yourself how you can get your money back, the liquidity of your investment. Yeah. You need to be able to define the liquidity of your investments and know that if I buy or invest in a certain product, how do I get my money back, either when I want it or when that maybe period expires.
All right, so Barak, in about 30 seconds, because I know we've run out of time, I just want you to take our investors and particularly our viewers who are watching who would like to invest in some of the areas that you see the greatest potential as we go into the next half of the year. Yeah,
I mean, like I said, I mean, for retail individual investors, please invest in some of the bond funds. Look at money market funds that are offering very, very brilliant rates. Yeah. If you are a risk taker, you can go into equities, but just know that that requires a much and a slightly longer time horizon. Be patient. Don't be in a hurry to make returns. But if you want to get it right now, invest in a bond like investments, and we do offer such instruments, and there could be other providers also doing that.
All right, Barak, thanks so much for making time to come and speak to us. And of course, we'll be looking for these opportunities and just to see how these different funds perform. And that's how we wrap up this edition of Business Today. Media KTN is up next.